Inheritance tax is a big subject. In fact, the whole subject of estate planning, which for most, and this is not a surprise, is that it becomes more relevant the older you get and the more money or assets value that you have. But when you get to that point, it is important. Many people feel, I've paid tax on my income and maybe my capital gains throughout life. And then the awareness that 40% of, not quite everything, but 40% of a lot of what you own may well be going to HMRC, not in your lifetime, but when it passes on to the next generation. It just causes people to say, well, what could I do about that? And the interesting thing there is that there is a wide range of things that you can do, and it's largely, what you can do in practice is largely asset dependent. For example, if the main reason you've got an inheritance tax liability is your main residence, then there's not too much you can do in relation to planning in practice for most people to minimise the tax on that. There is the residence nil rate ban. It does mean that you have a bit on top of the $325,000 that you can leave to other than your spouse or civil partner. But to plan with it is quite difficult. If you have cash and investments, there is quite a lot that you can do. If you own a business, then fortunately for most people, the business will be exempt from inheritance tax because of business relief, or a farm because of agricultural relief. Doesn't mean IHT planning is dead, but it's less of a pressure point because it is for most people exempt. But with cash and investments, there is a lot that you can do with the benefit of advice to perhaps make a gift of those assets, or at least transfer those assets, but in a way that you can retain some control over them. Because one of the fears that individuals, one of the impediments to giving, because the obvious way to avoid inheritance tax is not own anything on death, but that's not realistic for most people because they need to live. But the concern about longevity and I might need the assets, or I'm not sure who I want to receive them yet, can be overcome with the, again, legitimate use of trusts. So having a trust can enable you as one of the trustees to have some say in who gets what and when, or picking the right trustees to have a say in who gets what and when after your death. Having the right sort of trust may also enable you to continue to receive something from that trust by, for example, lending money to the trust, which is invested, and you receive your loan repayments if and when you need them.